The Prospectors and Developers Association of Canada, or PDAC, has been hosting its national convention since 1932 in Toronto, Ontario. PDAC 2023 is the world's premier mineral exploration and mining convention and is the leading event for people, companies, and organizations connected to mineral exploration. It was attended by close to 30,000 and featured more than 1,000 exhibitors and 2,500 investors. Mark Reichman, Noble Capital Markets Senior Research Analyst, was there. Throughout the day, he'll be discussing the convention. First, we'll get a brief C-suite description of the company. Then Mark will moderate a fireside chat. Enjoy the takeaway from PDAC 2023.
Thank you and welcome everybody. I'm Keith Phillips, the Chief Executive Officer of Piedmont Lithium. Very pleased to be part of this noble event today. Really grateful for the opportunity to speak to you directly. I'm going to go through a quick version of our corporate presentation, and then we'll have a chance to have some Q&A afterward. We're building a big lithium business, principally in the United States. As you may know, lithium is in high demand today, principally fueled by very strong growth in the electric vehicle business. And we've been building this business now for 6 years. We're an American company based in Belmont, North Carolina, and very excited to be participating in this business. So key highlights and why people should care about Piedmont Lithium. On the left-hand side, we're really in a position to capitalize on two important mega trends: decarbonization, which is happening around the world, and onshoring, which has really become especially important in the wake of COVID with supply chain disruption and the focus on the importance of critical minerals. Right now, over 80% of the lithium chemicals produced in the world are produced in China. That's a problem from an American perspective. We're building a business here in the U.S. to help address that problem. The U.S. government's very focused on this, and they've been using capital through grants and loans, and also creating tax credits, which are good incentives for the sort of business we're in. We're able to capitalize on that. We have 4 projects we're developing around the world, one of which is in production now. We should be having first shipments in July this year. So we've been a development stage company for 6 years. We hope to be revenue positive in the third quarter and generating hopefully very significant cash flow starting at that time. So we're excited about that. We have a large spodumene resource base. Spodumene is a mineral that contains lithium. It's the primary source of lithium today for batteries. We have large resources in North Carolina, in Quebec, and in Ghana in Africa. We're developing those. We do intend to take the material, the spodumene concentrate that we'll produce, and integrate forward to produce lithium hydroxide, which is the chemical you need in high energy density batteries for long range cars. We're diversified by project and geography with 4 projects in 4 different places. And we have some very strong commercial arrangements in place with Tesla and LG Chem. I'll talk about more in a minute. On the right-hand side, just a snapshot of the company. We have 19.2 million shares outstanding, market cap around $1 billion. The shares are pretty liquid, trading $25 or $30 million a day. We have a strong cash balance. We finished the year with $99 million US. We raised $71 million net from LG Chem in February as part of an investment they made into the company. We also own a lot of equity, a couple $100 million worth of stock in our 2 affiliates, Sayona Mining and Atlantic Lithium, which are liquid if we ever chose to sell. That's not our current strategy. So we're very well capitalized. I shouldn't need to raise capital here until we're building bigger projects down the road. We also have 11 firms who cover us in research, all with buys on the stock. If anyone's interested, feel free to reach out to me or our investor relations team, and we can forward you some of that information. Our structure, we have 4 projects. Quebec is a spodumene business. We're partnered with Sayona Mining out of Australia in what will be the first new production of spodumene in North America in over 30 years. In Ghana, we're partnered with another Australian company called Atlantic Lithium, developing a very large and exciting spodumene business in that country. It's the best located spodumene asset in all of Africa. In Tennessee, we're developing a lithium hydroxide conversion plant in a town called Etowah, about halfway between Knoxville and Chattanooga. Very excited about that. It'll be the biggest lithium chemical plant ever built in the United States to this time. And in North Carolina, where we have our roots and our headquarters, we're advancing the North Carolina Lithium project, which is a spodumene project and a chemical plant all on one site. It'll be the only site of its kind in the world. So 4 projects advancing. on a cadence as described on page 5. The North American Lithium restart, that's one of the assets we're JV'd with in Quebec, started up last week. We are accumulating material and hope to have first shipments in July and be in continuous production. That's a 27-year project. It should be, it'll make us a revenue generating and profitable company, we hope, and generate significant free cash flow. Ghana, we're going through the permitting process and expect to publish a definitive feasibility study this summer. Hope to be in construction a year from now. It should take about a year, so we'd be in production about 2 years from now. And again, that'll be a large spodumene concentrate producer. Tennessee should also be in construction this time next year, kind of spring, summer next year. Should take a couple years to build. And then Carolina's following those projects along and probably be a year behind Tennessee. In total, we'll have lithium hydroxide capacity of 60,000 tons between Tennessee and North Carolina. That's quadruple what current capacity in all of North America is today. So it's a very significant scale, and we'll have over 390,000 tons a year spodumene concentrate production to our account, which is more than we need for those two plants. Just an aerial photograph here of the North American Lithium project in Quebec. Again, this restarted last week, making really good progress here with our partner, Sayona Mining, who's the operator. This is a past producing asset. It's a brownfield asset. It was built about 10 years ago at a cost of $400 million. We bought it out of receivership with Sayona a couple of years ago, have invested $80 million in upgrading it and really making it world class. And again, very excited. There hasn't been spodumene concentrate production of scale in North America since the late 1990s. This is the first of its kind. This will be a big, important asset in the country, and we're very excited about that. We have, as part of that agreement, you think about a company like ours at Piedmont Lithium, we're obviously going to be selling lithium one day, but in the interim, we're actually going to be buying lithium as well. So we're going to be buying lithium spodumene concentrate from partners in Quebec, Sayona, and in Ghana, Atlantic Lithium. That's on the left-hand side of this page. And we'll be selling that material to customers until we have our downstream plants built, at which time we'll be converting it to hydroxide and selling the hydroxide. For the time being, with our Sayona agreement, we're not only a 25% owner of the project and a 14% shareholder of Sayona Mining itself, we have an offtake agreement for basically half the material, the greater of 113,000 tons a year, or half the production. So we assume it'll be 113,000 tons a year. That is subject to market pricing, but subject to a floor and a ceiling. The ceiling is $900 a ton for spodumene concentrate. Today's price is over $5,000 a ton. So potentially a very lucrative opportunity for us to buy this from our joint venture and on-sell it to customers. The two customers we've identified and named in the last couple months are LG Chem and Tesla. LG Chem will be acquiring 200,000 tons of concentrate a year over 5 years. Again, that'll be material we sell to them from Quebec, from the material we buy in Quebec. Tesla will be buying 125,000 tons over 3 years. As part of the LG Chem agreement, they agreed to purchase 6.4% of our company. That was a deal that closed in February, and we're very happy to have them as a significant shareholder. That offtake agreement I described could generate really significant cash flow for us. So if you think about us acquiring 113,000 tons a year from the joint venture, then the offtake itself could be very profitable. We're going to buy the material at $900 a ton. We're going to on-sell it to customers, LG Chem and Tesla. Prices this year have peaked at over $7,900 a ton. Right now we're at, circa $5,900 a ton. At $5,900 a ton, we would have a margin of around $5,000 per ton of concentrate times 113,000 tons of annual production. That could be over $500 million of annual EBITDA just from this offtake agreement. We also are a 25% shareholder of the JV. We'll share in the profits of the joint venture. Could be very lucrative. And production has started and shipments will start in July. So this is a near-term cash flow opportunity. Some observers think this offtake agreement alone represents the full equivalent of our market cap today, which is around $1 billion. So we're very excited about it. Our partner's doing a great job getting this asset in production, and we're looking forward to being a producer and hopefully harvesting cash from this investment to begin to invest in other things down the road. To fund our growth, you think about our project. So Quebec is built, so that money is essentially spent. Ghana is a relatively low capex event, probably $100 million of capex for our share. But Tennessee is going to be $600 million or so. With inflation, it could be bigger. Carolina is $1 billion. Again, with inflation, could be bigger. We have a lot of sources of funding, and people ask us all the time, where are you going to raise all this money? So again, we have 99 million of cash at the end of the year. We raised 75 million from LG Chem. We have 200 million of stock at affiliates. We also expect to generate very significant cash flow from North American Lithium starting in the third quarter. Production's already started. Shipments should start in the third quarter. It could be very profitable. Again, if you do the math and think about 113,000 tons a year, at whatever your concentrate price you project is minus, say, 900, it could be a very significant generator of cash flow. We also expect to be able to avail ourselves of a couple of government programs. The Department of Energy has given us a $142 million grant for our Tennessee project. We've also applied for loans through their ATVM program for both Tennessee and Carolina, and are optimistic we'll get those. Those would be relatively low-cost loans, so we're excited about that. And we'll also consider bringing partners into Tennessee and Carolina, which are the bigger CapEx projects. So we're really in a good position. If cash flow from Quebec develops the way we hope, we may never need to raise equity again, which would be wonderful. So we'll see how that develops, but we're kind of very optimistic. In terms of milestones this year, we've accomplished a lot in the last 5 or 6 years. I was last at a Noble event 5 years ago, I was reminded. So we've accomplished a lot. We have a lot also to come this year with 4 projects. So in Quebec, we've already signed the offtake agreements with Tesla and LG Chem. First productions happened. We expect first shipments and revenue in the second half of this year, hopefully starting in July. In Ghana, we had a resource update already earlier this year. We expect a definitive feasibility study in June, July. The mining license, we think maybe sooner than that. In Tennessee, front-end engineering design is underway. We're working on offtake discussions and project financing and permitting there. Carolina is really a permitting process now. And we're going to keep this page up in our presentation over the course of the year. We just hope to check more boxes. As we check more boxes and de-risk our story, we think our shares should appreciate, we hope, considerably, because we do think we're meaningfully undervalued. We're at a point now where we've developed a really interesting business, and it's all about execution. We've put the right team on the field to execute. We've built a really strong team, both in staff and engineering functions. Employment base has gone from 4 people 3 years ago to 46 or 7 today. We have over 100 engineering consultants working for us, full-time equivalent from Peter Kiewit, Primero, and some other groups, and I believe we can really execute going forward. So that is a quick introduction to Piedmont, and I'll leave it at that and happy to turn it over to Q&A.
NobleCon 19 at Florida Atlantic University. Located at the center of one of South Florida's most vibrant and fastest growing cities, Boca Raton offers an unparalleled cultural, recreational, educational, and business environment, the perfect setting for NobleCon 19. Now in its 19th year, NobleCon 2023 will be our biggest ever. We're inviting more companies, larger companies, and dramatically expanding the investor representation. And with the move to the FAU College of Business Executive Education, all new, state-of-the-art 50,000 square foot facility, NobleCon is the gold standard on the conference circuit. NobleCon 19 at FAU. It's time to invest in knowledge.
Thank you for joining us today.
Thanks, Mark. It's great to see you again. Thanks for having me.
Critical minerals, including lithium, received a lot of attention during the recent PDAC convention in Toronto. Now, you joined the company in July of 2017, which the company had a land package in the Piedmont region of North Carolina. Would you just elaborate on your acquisition and development strategy that has culminated in the portfolio you have now?
Yeah, so we started our business with a focus on North Carolina and the Piedmont region, obviously that's our name. What many people might not know is essentially all of the lithium in the world came from North Carolina in the 1950s to the 1980s. So the founder of our business had a view, North Carolina is a great place to do business. If we could build a land package and discover and find a lithium ore body, it could be a really profitable place to build a business. So we embarked on that starting in late 2016. I joined in the middle of 2017. We've made good progress. We took our land package in North Carolina from 415 acres to over 3,600 acres today. And along the way, as we were doing drilling and building up a big mineral resource and developing engineering plans and publishing studies, technical studies, The feedback we got from potential customers was, it looks like a great project. We're looking for suppliers who can supply more than that one project can supply. If you could get bigger, you'd be more relevant to us. This is feedback from big car companies and battery companies. And along the way, we had made some good progress in the capital markets. We were able to, our stock price grew. We were able to raise capital. And we had some conversations with some other earlier stage spodumene producers, turns out, or projects in Quebec and in Ghana in particular, where they each needed capital to develop their plans. They needed customers to sell spodumene concentrate to. And we were able to make really good strategic investments in Quebec with Sayona Mining and in Ghana with Atlantic Lithium at the bottom of the market. We were very lucky with our timing. I think we deserve credit for a good strategy. We got lucky with the timing, so as to say. So the whole idea, though, was to invest in other spodumene projects so that we could own part of that material, and B, be entitled through offtake to control a lot of that material. So that's what we've done. And if you add up all of our spodumene concentrate kind of entitlement on an annual basis, it's almost 500,000 tons a year, very much world scale, and very relevant to all the customers that we've gotten to know since then.
Well, this might be a good time to sometimes we get questions about comparing lithium production from conventional brine projects, hard rock mining, which is the spodumene from the pegmatites, and then even claystone, where companies are proposing to use direct lithium extractions. What do you see as the advantages and disadvantages of each? And do you ever see your company as straddling, those various sources of lithium, or do you think you'll stay pretty much in the lane of hard rock mining?
We're big believers in hard rock. There are some other minerals that are hard rock that contain lithium, petalite, lepidolites, and waldite, et cetera. We're very focused on hard rock, very focused on spodumene. Spodumene represents probably 65% of the world's lithium supply today. Conventional brines, 30-ish. So between them, it's 90-95%. There's some small lepidolite production, et cetera. Spodumene has a couple of big advantages. I mean, first of all, for us, we have a big spodumene endowment, so that's good. Spodumene concentrate production, relatively speaking, is quite straightforward. The technology challenge is not particularly intimidating. As mining goes, it's relatively straightforward, easy to do. Anybody with a good spodumene ore body, like our 3 ore bodies, will be able to produce a concentrate that is saleable. So execution risk, we think, is very low. That's number one. Number two, you can produce an intermediate product that you can sell. So we can produce a spodumene concentrate, 6%, 5.5% or so, that we can sell to people like Tesla and LG Chem. There's really no such intermediate product in the brine business or in the clay business or anything else. So having that opportunity to monetize that while you're building your downstream plant and to help fund the downstream is really attractive. The third thing I'll say, which really relates to the first, is we think the execution risk for non-spodumene, non-conventional brine projects will be very high. Again, spodumene is relatively straightforward. Conventional brine is challenging, but when it works, it can be very profitable. And there are 3 or 4 world-class spodumene brine assets down in South America. Most of the other brine projects you read about now are using DLE as their planned extraction, and they're using direct lithium extraction because they don't have the grade to justify the capital involved in the evaporation process that the big brines use now. We think those will be challenging. We think projects using clay or serlicite or other materials certainly can work, but we think they'll be more challenging than spodumene. So we're very happy with our focus. We're approached all the time with new opportunities outside of spodumene. We dismiss them out of hand. We'll always continue to look at good spodumene opportunities, though, if they present themselves.
So you think that spodumene provides a durable and sustainable competitive advantage, that really makes it more resilient depending on changing market conditions, which, are always very hard to predict going out a number of years?
Yeah, I mean, the key things are the capital involved in starting up a spodumene project is generally relatively low. We've been lucky. In Quebec, it was $80 million. It was a brownfield project. Ghana, the estimate right now is $125 million. That's a relatively modest amount of capital. You can get into production pretty quickly. You have an intermediate saleable product. Today, it's very profitable with prices where they are. It's kind of simple. I don't really think there's anybody who would sort of enter the industry and say, gee, I'd really rather do something other than spodumene if I could find a resource. Given a resource, I think everybody would want to focus on it. So we're really happy with where we are and where we started. And our challenge is to execute and then hopefully kind of acquire more spodumene in time to be able to grow our business to meet the growing demand.
We already touched on it in your presentation, but I just thought maybe it might be helpful to summarize each of those 4 projects expected to production, and then Piedmont's expected cumulative production, by year. I know that you already have the one project that started up, and you expect the shipments to start in the summertime by July, and then you're hopeful to have the cash flow and the earnings in the third quarter. But how do these layer? If you were to build kind of a show the step change, how do these what can investors expect from the 4 projects in terms of the cumulative production?
Yeah, it's really a good question, and it's really important. The things that drive the timelines are, how soon can you get ready? And being ready means the engineering's done, the permitting's done, and the funding's done. And then how long does it take to build and then ramp up? And in some cases, so I'll give you an example. So the good news in Quebec is Quebec's ready. It's actually producing. It started producing last week. Our partner had a press release last week, and we did as well, confirming that. It should ramp up reasonably quickly. It's a brownfield project. CapEx is largely spent. So it's fantastic. So it should be producing. It's producing now. It should be shipping in July, maybe even earlier. So that's great. Ghana, we need to finish a definitive feasibility study. That should be June, July timeframe. We need to get a mining license. We need to get an environmental permit. We're hopeful all that can be accomplished, the permitting side, over the next 12 months. So we'd be in construction a year from now, production a year after that, and the ramp should be pretty short. So that would mean production in the first half of 2025 in Ghana. And Ghana is important. If you think about the cash flow numbers I talked about from our Quebec offtake agreement, in Ghana, we should actually have greater cash flow. It's a bigger project in terms of annual production. We get 50% of it. It'll have a lower cost rather than paying $900 a ton. The production cost we currently estimated to be well under $500 a ton. That should be very profitable. So as you think of your layers, Quebec is first, producing this year with sales this year, fully ramped into 2024. Ghana starting up in 2025, and then Tennessee. The timeline in Tennessee is really driven by engineering and permitting, and then funding. So we think we'll be done a DFS in the next 4 weeks. We think we'll be done front-end engineering design by the summer. We think we might be permitted by the summer, but we probably won't be ready to build because we'll still need to raise the 600 million or 700, whatever it costs. And we have a lot of work being done on that in terms of the government ATVM program, in terms of potential equity partners. And the feedback from shareholders is, listen, if we're going to make this much money on our Quebec offtake agreement, why don't you hold off on Tennessee a quarter or 2 or 3 to really, bank cash, to really bolster the balance sheet so we don't have to dilute shareholders. I'm a shareholder. I really appreciate that sentiment. So our plan right now is to full speed ahead on engineering and permitting in Tennessee, and then working on funding, starting kind of with the DFS in a month, and probably be in construction a year or so from now. It'll take 2 years to build that. So Ghana and Tennessee may start at the same time. Ghana will take a year to build. Tennessee will take 2. And then Carolina will fundamentally be a year behind Tennessee as we think about it. It's going to have a very similar chemical plant. We don't want to build them both at the same time. So if you think about Carolina rolling forward to construction, early mid 2025, production 2 years after that. And we have a chart in one of our presentations on our website, which gives sort of a timeline. We look at what our run rate production should be by the end of each year. If you add it all up, it's very significant. So total production, 60,000 tons of lithium hydroxide. Currently, that sells for around $70,000 a ton. So do the math. That's 4.2 billion potential revenue there. That's very significant. And spodumene concentrate, a total production between Carolina, Ghana, or I should say Quebec, Ghana, Carolina, in that order of almost 500,000 tons a year, with a lot of that being sold before the conversion plants are built, and real cash flow built on an interim basis.
Well, Keith, you had a very distinguished career as an investment banker, and so I'm going to kind of combine 2 questions here. I want to speak to your funding options because we saw that the Department of Energy, I think it was part of their ATVM loan program, had proposed up to $700 million loan to Ioneer. On the other hand, General Motors stepped up with a 2-tranche, investment in Lithium Americas, along with an offtake agreement. So how do you think about financing these? I mean, is there a method in terms of when you're thinking about how you order these, you bring in a strategic partner first before you seek a loan from the government? How do you think about, structuring the financing options for these various projects?
Yeah, it's a really good question, and I spend a lot of time thinking about it. That is my background. So as we think about funding, opportunity number one for us is cash flow from Quebec to fund
Exactly.
First Ghana and Tennessee. So that's a big. We're very lucky to have that. I mean, the folks at Ioneer and Lithium Americas, they're good friends of ours, developing great projects. They don't have another project to generate cash flow first. Well, LAC arguably does in Argentina, although they're splitting that off. But having that cash flow is really important, and it'll make us, we think, a more valuable company. It'll make us a more financeable company. It may open up corporate funding options that are different and less expensive than project funding options. But then looking at the project funding, so for Tennessee, which is currently estimated at $572 million of capital, with a DFS coming, that number may grow with inflation. So if it's a little higher, certainly a loan. We have the grant, $142 million from the DOE. We have applied for a loan that would be worthwhile getting. We will be talking to strategics like General Motors and others. LG just did put $75 million in the Piedmont. So we're going to look at all the opportunities, really all the above, and try to balance who brings what to the table from a scale of check size, dilution, covenants in the form of debt and everything else. And what I want to make sure is we have a really strong capital structure. These are hard projects. I mean, the spodumene side of it's relatively straightforward. The chemical plant, there's it's a process to get up and running and get to battery quality and get qualified and all that. You want to make sure you can weather any potential storms with pricing, volatility, et cetera. So we'll evaluate all options. The good news is there are a lot of options. I think a couple of years ago, it wasn't obvious a couple of years ago that the ATVM program would be available to a lithium company like Ioneer or to Piedmont. So it's good that it is. That's great for us. It wasn't obvious a year ago that someone like General Motors would invest $650 million in LAC, or someone like LG Chem would invest $75 million in Piedmont. So 2 years ago, those options just weren't on the table. Ford has loaned money to a company in Australia called Liontown. I think it's a $300 million loan, real big check. So people in the supply chain need lithium. There's not going to be enough. There's certainly not going to be enough domestic material. So people like car companies, battery companies, cathode companies, they care, they're focused, and we'll be talking to all of them to give them an opportunity to kind of co-invest and partner with us in Tennessee and ultimately North Carolina. That'll take time. In terms of the loans with the ATVM, it's a little bit of a chicken and egg. You might have seen after the General Motors investment into LAC, they simultaneously announced a DFS. Having a partner like GM and a DFS completed was an important catalyst for them to get into the due diligence portal for the ATVM loan. In Ioneer's case, they had a DFS already published. They had Sibanye-Stillwater come in as a partner and EcoPro and others as off-takers. That was an important catalyst to get their ATVM loan. So there's work to be done on all the fronts. It'll take time for us. That's okay. Our hope is to spend the next 9 or 12 months really putting the right funding package together while we generate cash on our own from Quebec and really be in a really strong position when we do launch construction in Tennessee.
So just to summarize your offtake agreements and your strategic investments, it's LG Chem, right? That starts up in the second half of 2023.
Yep.
And then you've got Tesla.
Yeah, and those are both offtake agreements for the spodumene concentrate coming through our offtake agreement in Quebec. So the Tesla shipments will start whenever they're ready, late this year, early next year. The LG Chem, our first shipments will probably go to LG Chem, hopefully in July.
Okay. And then just lastly, do you expect at some point there'll be some consolidation within this industry in North America? And how soon would you expect that?
Yes. The short answer is yes. I mean, it's a fascinating business where, 5 years ago, nobody cared about lithium. Now there's a lot of activity. You have companies like you mentioned, Rio Tinto. There are a lot of others who aren't currently in the business, oil companies, private equity groups, chemical companies, car companies. There are rumors about different car companies maybe buying some of our competitors. It's going to be fascinating. I think there will be a lot of consolidation activity in the next several years, a lot. Right now, you have 4 or 5 major lithium producers and dozens of developers. We're one of the developers. We're about to become a small producer in Quebec. which is a big change. But I think you'll see consolidation activity, and we're very open-minded. We're focused on building a big business and maximizing shareholder value at the same time. And if that means participating in merger activity, we'll approach that with eyes wide open. But we're very focused on doing the right thing for shareholders and driving value. And we've been lucky to have made a couple good investments of our own already. But yeah, there'll be a lot more to come. It'll be fun to watch.
Well, it has been a real pleasure to have you join us today, Keith. Thank you so much.
Thank you. I really appreciate it, Mark. Thanks a lot.
With more than 6,000 small and micro-cap companies listed, if you're looking for the next Apple, then Channelchek truly is your trade. It's an investor community where you can access independent Wall Street research, advanced market data, balanced news, corporate videos, and podcasts. You can even register to attend in-person Meet the Management Series luncheons, and to be part of the preeminent annual Small and Micro-Cap Investor Conference, NobleCon. And here's the best news. Since Channelchek is sponsored by the featured companies, premium membership requires no investment. It's absolutely free. So check it out. Log in today. Find out why Channelchek is North America's leading source of research on the companies that just may change the world.